Tired of losing money with free or paid buy sell indicators? Use these 4 simple steps, and I bet you will never end the day with a loss again.
Just do it!
Moreover, we will show you an extremely profitable strategy with just one free trading indicator that is at least 10x better than 90% of paid indicators.
Are you serious?
During this video, we also will show you how you can access our top-notch private indicator, known as QuantAlgo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Without further ado, let's consider 4 simple steps that will boost the win rate of any buy-sell indicator by at least 10%, as well as our advanced strategy developed specifically for this video. And the first point is support and resistance. It may be quite obvious, but just let's take a look at some examples.
Okay, let's go.
Observing the chart, a buy signal is evident at this point. It's noteworthy that, in this instance, we'll examine examples using our proprietary indicator QuantAlgo version 2.1. So, we can also see that the buy signal is located too close to the effective resistance level, which is why we should avoid it, as there's a high probability that the price will reject it or just continue its dominant trend move. Again, here's gold, and we can see that the sell signal occurred right at key effective support, and the price just rejected this level and reversed to the upside with a perfect buy signal. This rule is straightforward: simply steer clear of all sell signals close to key support levels and buy signals near key resistance levels. There are tons of YouTube videos showing how to spot support and resistance levels, but if you want to learn how to spot effective levels like those shown on the chart, Quant Education is for you. You will be able to spot those levels starting tomorrow. And here's a pro tip. The distance between the signal candle and the effective level should be equal to at least 1.5 for 1 risk-to-reward ratio, considering a stop-loss position beneath the most recent low in a bullish scenario. If the distance is less than 1.5 for 1 RR, we skip the trade. Exactly the same is true for the bearish case. So, let's move on to the next point. Before we continue, if you want to support our channel and all this hard work by our team, smash that like and subscribe button. It takes just a second. Continuing, it's essential to consider the candlesticks that precede the signal candles and those that form on them. We're going to consider this topic step by step. First of all, pay close attention to the candles before the signal. As can be seen on the chart, we have a small candle, then we have a bigger candle, and the signals occur even on a bigger candle. From the price action standpoint, this tells us about a momentum gain, which is a favorable condition for the trade entry short, and the price then dropped drastically. Conversely, we can see that we have a big candle, then we have a smaller candle, which is also a long wick candle, and then we have an even bullish candle. First of all, this tells about a momentum loss, and more importantly, these 3 candles before the signal form a bullish reversal candlestick setup. Obviously, this is not a good price action for entering the trade short, and the price reversed to the upside. Before we continue, we want to share with you our top private indicator, QuantAlgo, which can be used in combination with previously discussed indicators or on its own. This high-quality algorithm, which combines complex trading processes to tell you when to buy and when to sell, was developed to enhance your trading experience. You can use it on any time frame for different asset classes. So, if you want to access QuantAlgo to get results fast, all links will be in the description and the comment section below. Without this algo will put you at a disadvantage. Also, it's important to take into account the type of signal candle. As we can see, the buy signal occurred on a massive momentum candle, so the next rule is to disregard all signals that occur on significant momentum candles. Here's why. Firstly, those candles indicate an imbalance, and prices often tend to fill that imbalance, resulting in a pullback or choppy price movement, as illustrated in the chart. Secondly, entering on those candles would result in a very low risk-to-reward ratio. By the way, QuantAlgo users are equipped with advanced strategies that guide them on how to capitalize on situations involving momentum candles. In the bearish scenario, there was a sell signal that arose on a significant momentum candle. As a result, the momentum candle led to price consolidation and a subsequent reversal to the upside. Now, let's move on to the next topic. The following crucial aspect is market structure. So, it's essential to evaluate the prevailing trend to enter trades aligning with the dominant market direction. With that, go to the higher time frame, for instance, 4 hours. As can be seen on the chart, the price broke multiple effective levels, and more importantly, it formed higher highs and higher lows. When it comes to the most recent price action, the price just closed above the previous higher high, telling us about an uptrend. As a result, we should focus on buy signals only on a lower time frame. considering the current market structure. At the same time, sell signals will become prominent only when the price closes below the preceding higher low, indicating a change of character for us. If this seems too complicated, you can simply utilize the Quant Algo Trend Dashboard, which incorporates data from the higher time frames you specify and informs you about the current trend. You can easily validate a buy signal when the trend parameter on the trend dashboard indicates a bullish or strong bullish condition. As you can see, the price then proceeded up drastically. When it comes to the bearish case, we have a sell signal, while the trend dashboard indicates a bearish trend condition. And boom, the price plunged heavily. At this point, let's move on. Another way to improve the profitability of any buy-sell signal indicator is to use a volume confirmation component. By the way, we have a special video about the most effective volume indicators, so feel free to catch it up. Our favorite indicator is RedK Everix, created by a RedK trader. Again, optimal settings are shown in the full video. So, to confirm a buy signal, the RedK Everix volume bar should be green, and more importantly, exceed the 75 level. Also, the signal line should have a blue color. As a result, we have a perfect upside move. At the same time, to confirm a sell signal, the volume bar must be colored red and be located above the 75 level, with the signal line being colored orange. Boom, the price dropped significantly. Now, let's progress and explore an advanced strategy employed exclusively by the top 1% of traders. So, we're going to show you an insane buy-sell powered strategy that is more profitable than 90% of paid indicators that compete with Quant Algo. Again, you can apply it using any free buy-sell indicators. It's also important to note that we disabled all Quant Algo filters, so there may be more fake signals. First of all, go to the 1 hour or higher time frame and wait for the buy signal in a bull case. For example, here's Nasdaq, a 1 hour time frame, and we can see a buy signal right here. Now, switch to a 1 minute time frame and wait for a pullback with wide swings to be able to draw a trend line. Right here, we can draw a trend line through these two swings. Obviously, our next step is to wait for the trend line break and then enter the trade on the subsequent buy signal. Boom, as you can see right here, the price broke the trend line with a buy signal. However, this will not happen very often, so that you need to enter on the first buy signal after the trend line break. In this scenario, we disregard the rule concerning momentum candles, given that the setup is supported by a higher time frame. So, we set a stop below the latest low and target 4-for-1 risk to reward ratio. As we can see, the price hit our take profit. Let's also view a bearish case. Here's dollar yen, a 1 hour time frame. We can see a sell signal right here. So that let's go to the 1 minute time frame and wait for a pullback. We have already established a trend line, and more importantly, the price breaks it right here. Our next step is to wait for a sell signal, and here it is. We set a stop above the recent high and target the same RR ratio. And boom, take profit smashed. So, if you're enjoying the video, leave a like on it and subscribe to our channel, as it always motivates us to release more new content more often. Thanks for your time, and I'll see you in the next video.